Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, July 8th, and it's around 4:30 New York time. It's a pretty quiet calendar the rest of this week. Tomorrow is July 9th, so we're going to be finding out what the rest of these trade agreements look like, if there are any, or if we're just going to be seeing letters like we've seen to start the week already with Japan and Korea. There will be a 10-year Treasury auction tomorrow at 1 p.m. Eastern. We'll also be getting the Fed minutes at 2 p.m. Eastern. Don't really expect much to come out of that. Also, initial jobless claims will be coming on July 11th. We're looking for 235,000 versus 233,000. The continuing claims number is obviously the one that the market's really focused on. That's been generally trending higher more recently, so we'll want to keep an eye on that. We'll then have a 30-year auction on Thursday afternoon at 1 p.m. Eastern, and then Friday will be a relatively quiet day, and next week we'll start getting some more economic data to come. In terms of where we are in the marketplace, when we just take a look at the euro, we'll start off with that. The euro, again, has been trending higher more recently. We got up pretty close to 119. We topped out more recently at 118.1. You can see there's still some further room to extend higher if this trend is to maintain. There are some signs, though, that the euro is starting to lose some strength. You can see it on the momentum indicators. RSI here made a high of 75.32 versus a high of 76.1 back in April. And this comes as we have a lower high on the RSI and a higher high on the price chart, and that would suggest that there's a bearish divergence forming and momentum is really starting to fade. Now, right now, all we can really do is sit, watch, and wait and see how this kind of plays out, because right now we have some very strong support at 116.70. We also have the 10-day exponential moving average there, and we have the trend line a little bit lower at 116.30. So as long as we hold above support at this 116.70 and hold that 10-day exponential moving average, expectations would then be to move up to around 119. If for some reason, though, we were to break that level of support, we were to break this trend line, then things start changing in a pretty dramatic fashion, and we could see the euro slip all the way back to 114.70. But as of right now, we haven't gotten those confirmations, so we'll continue to use the trend and the exponential moving average as our indicator. When we look at the pound, there has been obviously a clear shift in momentum here. We did end up reaching 137.40. We weren't really able to get any higher than that. RSI is starting to show signs of breaking down, moving below the uptrend. We're also now below the 10-day exponential moving average. It looks like 3 days in a row. Really, the bigger question is whether or not this trend is really officially broken or not, depending on how you draw this out. For now, all the trend lines are holding, and that would suggest that we can continue to expect the pound to ride higher. But again, we need to be very mindful of this, because we're at a point where we could really see the pound start breaking down in a more meaningful way. If we're not able to recapture and get above the 10-day exponential moving average in a pretty quick way over the next day or two, you really have to be wary of further upside here. And one reason why you can really think that is because you're obviously seeing the momentum shifting also in the yen, and the yen is also getting close to a point where we could see it also moving higher. You can also draw out a series of tops here. It looks like we're breaking above this trend line. The last time we tried to do it, we didn't succeed, and this time it looks like we're getting a little bit further away from it, which would suggest that perhaps this is the time that we're going to see the yen finally break higher and really begin to weaken versus the dollar and head towards this 148.30 area. And we could really be targeting the 151 region as well. You can clearly see momentum RSI trending higher right now, so we have to consider potential upside risks here that the yen is going to start weakening versus the dollar. If the change in trend for the dollar is real, then we really need to also consider that we're looking at a scenario where gold can really begin to start weakening. There is also potentially an uptrend here in gold. You can see that that's also very close to breaking right now. Here's your 10-day exponential that's been serving as resistance. We also have resistance at 3,325. A break of this uptrend suggests that we slip back down to this 32.30 area. with the potential to go even lower. Here you can see RSI momentum indicator clearly broken. In fact, you begin to make a case that momentum has actually shifted, and we're actually starting to see momentum really turn lower in a more meaningful way. Oil's been holding this 65 to 66 area. It looks like we're starting to get some upside momentum forming again. Here you can see it on the RSI, holding above the downtrend that's in place on the RSI, also trying to reestablish the uptrend. You can see here we've been above the 10-day for a couple of days now. The $66 to $65 region has obviously been a very strong level for some time, and I think if not for Liberation Day, you may not have seen it actually break. And so it looks like we're just right back to where we were, with the potential here for oil to kind of carry back up towards 72, perhaps in a more measured pace than what we saw in the weeks prior. When we shift over to equity market indices, we've seen the DAX bounce back after the last couple of weeks where it was really weakening. So we're back towards the highs here. Right now we don't really have much of an indication in terms of what's likely to happen. We're obviously at a key level of resistance. This dates back to here back in the end of May. If we're able to clear resistance at 24,285 and then clear resistance at 24,485, there's a very good likelihood that we're just going to continue to ride an upward momentum. We're just going to continue to ride higher. The question really is whether or not that's going to happen, or if we're setting up some sort of reversal pattern in the process. We don't really have enough to go on at this point, other than the fact that the RSI here is at 59.5, and we're clearly making lower highs in it now, really going all the way back to February of 25. And so at this point, there's the potential here that we're seeing something maybe beginning from a shifting standpoint, but we really don't have enough information yet to confirm that. So for right now, you just have to watch the prior highs at 24,460, failure to push through, or a sharp reversal lower. The FTSE's also been advancing again, getting very close to making a new high. Copper here in the U.S. has surged today after President Trump announced that he would be putting a tariff of 50% on it. And so with copper trading up and shifting to a new all-time high, I would think that the FTSE likely follows suit and continues to move up. But the trend of just trading with copper has been very strong, and it hasn't really changed. And so there's no reason to think it's about to change now. When we shift over to the NASDAQ at this point, we don't really have much to go on here, other than the fact that we saw a strong move higher last week. We have seen a little bit of the market kind of stalling out the last couple of days as we've been getting some tariff announcements. Again, until you break the 10-day exponential moving average, there's really not much to say when it comes to the market potentially moving lower. Yes, there is a potential here of something with the RSI beginning to show signs of fatigue. But again, if you break the 10-day, then you can start maybe making formulations or thinking that we're going to trade back down to 22,063. But at this point, we just don't have that yet. And we can't really start thinking about moves lower until we start really seeing that breaking down. When we look at the S&P, it's a very similar story. I kind of played with this idea that maybe we formed a rising wedge pattern in the S&P, and this is the throw-over phase. The S&P is down about 2 days in a row, although very minor. Again, very similar situation, 10-day exponential moving average. Really the key here, if that breaks, we can talk about coming back down to 6,055, and then we can start talking about other things. But until that happens, we're just kind of waiting and watching. And then finally on the Dow, you can see we also got very close to making a new all-time high. We didn't quite get there, and the Dow actually has reversed a little bit more than the S&P and the NASDAQ at this point, getting closer to the 10-day. If we can manage to break below 43,984 or break below 43,900, then it opens the door to potentially moving back to 42,800. But right now, we're still just waiting and watching to see how that plays out. Anyway, hope you have a great rest of your week, and we'll see you again soon. Bye.